Stay here if you want, but at Sam Faster Freedom and YouTube is probably where you want to go. We live? All right, let's go, let's go. I'm excited to do this live with you all today. Welcome, welcome. My name is Sam. I'll introduce myself here in a second, but quickly let's go over the agenda because 95% of my views on this specific video are going to be after this live because I don't have a big enough following to launch a huge, 1,000 people on the live. Most of these videos get 1,000 views, but it's after the fact. So thank you for being here live. And if you are wanting to, if you're watching the version after the live, thank you for being here as well. We appreciate you and I appreciate you guys. All right, here we go. So I'm going to introduce myself in a minute. I'm going to talk about the real estate market and what's happening. I'm going to do a quick little giveaway. And then I'm going to talk about 3 ways to make money in a recession, specifically with real estate. I'm going to talk about the 3 main ways to invest in real estate. And then I'm going to talk about how specifically actionable, tangible things to do to make money in those 3 main ways of real estate during a recession. So if you're just joining me, let me know where you're from, TikTok or where you're from in the chat box. So let me know where you're from on YouTube if you're just joining. If you're watching the recording, I'll do this like 3 times. It takes 10 seconds. Don't worry about it. But give this video a like, whether you're watching the live or the recording, and share this on YouTube if you're on there. And let me know where you're from in the chat box, like physically where you're from, not just from TikTok. Let me know where you're from, like where you live. And then let me know how many lives you've been on before. I got Tiki and Instagram on here and YouTube up here. All right, so that's what I'm going to cover. So hopefully you're excited about learning about the market, my giveaway, and 3 ways to make money in a economic recession, how you can make money in real estate and take advantage of it, and strategies to maximize the little dip, bubble, whatever, not a double, the bubble, little dip we're going into. So give this video a like if you're on YouTube. It's super freaking easy and it helps me a lot. I'm giving away more free information than anybody on any social media platform, I promise. Not the best looking, don't got the best hair. Sorry, Ryan, you got that one. I don't yell at you like my buddy Kong. I don't wear eye patches like Chris. I don't say that the world's ending like me, Kevin. However, I give away more free information than all those guys combined. I promise you that. So let me prove it to you by hanging out on this live and sharing this and tapping the screen. All right, so my name is Sam. I'm a real estate investor. I own a house buying company that's going to flip 300 houses this year in St. Louis. A majority wholesale, but probably 75 rehabs here in St. Louis. So I'm very actively investing in the wholesaling and fixing and flipping game. I also own a $40 million rental portfolio that I've been able to buy without using a dime of my own money. I own apartment complexes, I own single family rentals, and I own storage facilities, all without using a dime of my own money, and it equates to $40 million and about $250,000 a month in gross rent collected. Now don't get it twisted, there is so many expenses that come out of that $250 with mortgage, insurance, taxes, maintenance, all that stuff. The net is not that. However, it's a lot of money coming in every month, and I've been able to do that without using any of my own money. So that's what we're going to talk about. That's a little bit about me, why I'm up here standing and yelling at you for no reason, because I'm excited and I am passionate about real estate, and I want to hopefully open your eyes a little bit, and I appreciate everybody for being on here. Thank you. I don't really get to say that as much as I'd like to, but I appreciate every single one of you that is watching. So let me know where you're from in the chat box on YouTube, and let me know how many or how much real estate you would like to own in the next 12 to 24 months. We're going to put it out there. We're manifesting it. The next 24 months, how much real estate do you want to own? Throw that in the chat box. All right, so that's me. Now let's talk a little bit about the market. So the market is definitely slowing down, but it's still moving forward. I think we're in deceleration mode right now, meaning we're not going 100 miles an hour, which is a good thing. We're going 50 miles an hour. We're going under the speed limit. We are being responsible with our growth right now, but we're still moving forward. I don't know anywhere, I'm sure there's somewhere in the country, I don't know anywhere where the market is drastically dipping. You know, I have connections all around the country. Here in St. Louis, our last 3 houses we put on the market went for over asking on opening weekend. That is not a crash. If it took us 3 months to sell those houses, that would still not mean a crash. So we are nowhere near a crash. And also in the chat box, let me know what you think the market's going to do. TikTok, Instagram, let me know. You think the market, double tap the screen, you think the market's going to go up, stay flat, or go down, or go kind of down. So I think the market is just decelerating. I think there are so many factors that are, sorry I'm not doing a doomsday prediction like me, Kevin, like I said, or even Graham Steffen's been doing that a lot recently. Sorry, I don't think the world's ending and the market's gonna crash 30%. Because it didn't even crash 30% in 08. Look up the stats, it crashed 23%. In a 2-year period, the worst real estate period slash period crash slash period in history of the United States was less than 1% a month for 24 months. So it's not going to do anywhere near that. I'm very confident of that. Yeah, you can throw chats in D-Money. Got D-Money over there throwing chats in. So I think the market's strong. It's going to continue to remain strong. And I think the fact that there's these fear mongers out there, these Meat Kevins, these Graham Steffens, these people that strike fear into you to get you to click on the video, that's driving a lot of people away from investing. So deals over the next 24 months are going to be easier to come across than the last 24 months. I'm going to buy more real estate in the next 24 months than I did during COVID and crazy, crazy growth and hard to find deals. I'm going to buy more real estate in the next 12 to 24 months. And if you're following me on social media, TikTok, YouTube, Instagram, you'll learn how to as well. And Ordinary Guys, Extraordinary Wealth podcast. If you're a podcast person, download that podcast. It's extremely fun. It's extremely informational and educational. We talked about me not wearing pants in one episode. We talked about me not having shoes, Dakota not having shoes. I've done push-ups. It's fun. So check out that podcast. I think it's going to be ginormous, actually. That's what she said. All right. So giveaway. Anybody on here can DM me on Instagram, and I am the only one Dakota is mad at me. He yells at me every morning because I'm the one that answers my messages. I don't have somebody else doing it. I answer my direct messages on social media, on Instagram. So DM me on Instagram, and I will give you a free giveaway, a free 25-minute training. So DM me on Instagram. I will get that to you today or tomorrow. Just send me a message, free training. That's all you need to do. There's your giveaway. All right, 3 ways. I've actually never done that. Have you? 3 ways? All right, so anyways, we see, like that fun, right? All right, so there's 3 ways to make money during this recession, because nobody can deny we are in an economic recession right now. Like the economics are showing, and I know the government is trying to redefine recession for the save face, and also maybe it does need to be redefined. Who knows? I don't get upset about stuff I can't control. However, we are in a recession, at least a little bit right now. Everyone on YouTube, if you would like to share this, if you're on TikTok or Instagram and you're wondering why I'm staring over there, it's because I'm on YouTube live at Sam Faster Freedom. That's where I'm going to answer questions. That's where I see the chat. That's where I'm going to really focus, and the camera's much better. So stay here, TikTok and Instagram if you want, but go to YouTube at Sam Faster Freedom if you want the better experience, or stay here. Either one's fine. All right, so there's 3 ways to make money in real estate. It's wholesaling, it's fixing up, it's fixing upping, is that a thing? Sounds like Keepy Uppy, sounds like a episode of Bluey that my daughter watches. All right, so there's 3 ways to make money in real estate. Now, let's talk about how to make money in them when the actual market is shifting, because as I said earlier, the market's not crashing, it's just slowing down, and that's all I think it's going to do, because I think if it starts to crash, they'll just lower interest rates and people start buying again. The supply is too low. So it's not crashing, it is changing and shifting, but the recession is here for the market, for the actual economy. I think we're in for a 12, 24-month recession. It'll bounce right back up. By the next election, everything will be fine. However, how can you make money and minimize your risk over the next 12 to 24 months when things are a little more volatile than usual? TikTok, Instagram, double tap the screen. Head over to YouTube if you want, at Sam Faster Freedom. All right, the first option is to wholesale real estate, okay? Can we good? Is that good? All right. The first option is to wholesale real estate. Now, wholesale real estate in the definition of it basically is recession proof or crash proof or bubble proof. It literally is, because if you wholesale the right way, you can wholesale with no money, you can wholesale with no credit, and you can wholesale with no risk. No money, no credit, no risk. You can wholesale with all 3 of those things. Now, who thinks I'm full of it? What emoji can I use for full of it? I don't know. A big old poop emoji. Who thinks I'm full of poop? Who thinks that there's no way that there's an investment out there that you can make money that does not require your own money, that does not require you to have a good credit score or credit at all, and you can do without risk? Do the poop emoji if you think I'm full of poop. Do it on there if you want. Have fun, double tap, head over to YouTube. So there is, so I'm going to talk through. So obviously, if there's an investment that doesn't require any money, no credit and no risk, then it's a great recession-proof strategy. But don't worry, we're getting ready to talk about how to flip real estate during a recession, and we're going to talk about how to buy rentals during a recession. So we are far from done, my young Padawans. Are you laughing at me, Dakota? I'm going to go off screen and punch Dakota. Say ow. I didn't actually punch him. All right, so A lot of poop emojis, great, that's fine. Some of you either think I'm full of it, or some of you maybe think that just is fun to write a poop emoji, and that's fine. But let's talk about how you can wholesale with no money, no credit, and no risk. Let me walk you through a very common wholesale deal that will prove to you that you can wholesale with no money, no credit, and no risk. Now, I don't think there's any lying. Obviously, if you have money, why did I jump? If you have credit and you're willing to take risk, then you can probably wholesale quicker. You may make more profit, you have more options. But if you have those things, you do not have, it's not a have to, all right? Come on, 31 people on YouTube watching, only 11 likes. Give me a like if you're watching. At least half of you, come on. It's easy. I mean, I feel like people like I lose money when I hit the like button, or like their soul leaves them. Likes help, come on. All right, anyways, all right. So here's a simple way to wholesale that doesn't require any money, any credit, or any risk. All right, let's walk through real estate investing, and then let's break out wholesaling. So I think most of you agree, or I will ask you if you agree, this is real estate investing in a nutshell, right? It is taking a distressed property, fixing it up, making it nice, and then either selling it or renting it to make money. Thumbs up if you agree. I want to make sure you agree with me that this is how real estate investing works. See, people left because I asked for likes. They left because I asked for likes. All right, anyway, sorry. All right, here we go. So everybody agree, thumbs up, that real estate investing in general, and then I'm going to break out wholesaling, is distress property, fix it up, make it nice, rent it or sell it to make money. At its core, that's what real estate investing is. Please let the poor people have the houses and not inflate house prices. I'm not doing that. Pure Tate Power, real quickly, Pure Tate he's one of those people that thinks that real estate investors like myself are hurting, we're helping. So I take distressed properties that Pure Tate and anybody watching would not buy, because nobody here watching has 20% down in cash to put on a property and then another $50,000 in cash to repair that property, right? So I take properties that are not livable, I fix them up, and I sell them to people to live in, and I rent them to people to live in. So I am helping the housing shortage and the housing bubble by adding more supply. If I go away, the supply goes away and nobody wins. So I am adding to the supply. It's just a shift that most people don't understand. They think landlords go out and buy retail houses and rent them out at astronomical rates. That's not really how it works. He just doesn't understand. Pure Tate just doesn't get it. Nothing wrong with Pure Tate. He or she's a good person. They just don't understand. All right, so back to this. Distress fixed up. Now, wholesaling is living inside the transaction. So let's walk through this house and show you how you can buy this and wholesale with no money out of pocket, no credit, and no risk. So you found a distressed property. Doesn't really matter how. It could be from, Drive for Dollars. It could be from another wholesaler. It could be a family friend. It could be whatever it may be, sending out mail. You found a distressed property, and you go to the homeowner of the property and you negotiate a purchase price. You say, I will buy your house for $150,000. Today is day one of the contract, and in 45 days, we're going to close, and you will get your $150,000 in 45 days. So you get a contract that states that. That's like any other real estate contract out there, an investing contract. There's a ton of them out there. So you have the property under contract to purchase. They are going to get paid $150,000 via the contract on the 45th day. However, here's the no risk part. You have a 10-day contingency, day 1, day 10, that allows you to back out of the contract if you don't sell it. All right? Ray Cook, somebody just asked on TikTok, yeah, my podcast, I have a podcast episode about how to find private lenders. I have like 10 videos on YouTube how to find private lenders. Just DM me on Instagram for my free training and DM me, say private lenders, and I'll send you private lender information. All right, anyways, so you have a 10-day contingency, which is very, very normal in all real estate. If you're on Tiki and Instagram, stay here, double tap the screen, or head over to YouTube. I'm looking at YouTube for what I'm looking at Sam Fast Freedom on YouTube. All right, so you have a 10-day contingency, meaning you have 10 days to sell the contract or back out legally. Make sure the seller knows about it. It's very normal in real estate transaction. If you own a personal house or your parents own a personal house, there's this contingency in there. It's usually 45 days or 30 days in normal real estate transactions, but it's called the financial contingency. The bank has to, how are you going to lose weight to eat McDonald's? How are you going to lose weight to eat McDonald's?
It's the quickest place.
Jimmy John's is way healthier and it's faster. Well, all right, whatever. Anyways, all right, so a 10-day contingency. When you're buying your personal house, there's a 30-day financial contingency. The bank has to underwrite the deal. The bank's not just going to give you money because you want it. They have to look at it and make sure it makes sense. So there's that contingency in normal real estate deals. Then also there's usually an inspection contingency. You're not an expert when you buy your personal house. You're not going to go up in the attic. You're not going to check the roof. You don't know what AC condenser is supposed to look like. You don't know what electric panels are within code or not. So there's an inspection period. So that's all you're getting. You're getting a 10-day inspection financial contingency built in. Meaning, if on day 10 you haven't sold it, you can back out of the contract. There's your no risk. No risk. You can back out after 10 days legally. No risk. Make sure they know about it. Now, there's no credit involved because you sold it. On day 45, you sold the property before day 10 to somebody else that has money and credit. And they are paying $175,000 for this property. That leaves them enough room to make money. So they're paying $175,000 to the title company. The title company pays the seller $150,000, and how much do you get paid in this example for not doing anything? I came over here from IG because the quality is way better. Yeah, Juan, the quality is probably way better. Juan is on YouTube. He just said he came over from IG because the quality is better. So stay here on this and Tiki if you want, but the quality is way better on YouTube. Wow, we really dropped. Well, that was weird. I mean, I'm still was fine, but 18. Did it again?
It was good for like 6,000 to 2,000.
Now it's back. Yeah, we got to get that internet up. All right, here we go. Anyways, so you get made 25 grand. So you get made 25 grand on this deal. There was no risk because of your 10-day contingency. There's no credit because you're not closing on it. Nobody's going to run your credit. They're going to run the credit, the lender or the people are going to run credit on the $175,000 purchase. And then you don't need any money because you didn't spend any money, you didn't close it. So, yeah, it's doing it again. It says YouTube not receiving. All right, so this is why there's no money, no credit, and no risk. So I know there's a lot more to it, but that is an example. All right. Now, fixer upper. Now, what is your strategies to fix and flip real estate? I'm not going to tell you that you can fix and flip real estate without using any of your own, or you can use it without any of your own money. I'm not going to tell you that you can fix and flip real estate with no money, no credit, and no risk. You don't need any money to fix and flip real estate, but you're going to need credit or decent credit. I mean, I guess you don't even need credit. You don't need any money and you don't need any credit. But yes, there's risk. When you're fixing and flipping, I'm going to show you how to do it with no money, no credit, but there's risk involved. But let's talk about how to minimize that risk, okay? Double tap the screen. Yeah, apparently I told you all to go to YouTube and the internet sucks here, but stay there if it's... But go to YouTube if you want, but YouTube just not pushing it. All right, okay. So no money, no credit, no risk. Or little risk. There's little risk in fixing up property. So what you do is you borrow money. You take that distressed property, you bought it, you fix it up, and you sell it and make a profit. So what you do is you borrow money. What did we say? It's a $175,000 house. Let's use that same example. Let's say somebody wholesaled it to you. You bought it for 175 grand, and you put 25 grand worth of rehab into it. So you have $200,000 in the property. Now you can borrow that entire $200,000 from a private lender or a hard money lender. Now, hard money lenders are going to look at your credit score. Private money lenders won't, most likely. And if you want to know where to find private money lenders, DM me on Instagram. I'll send you some links and I'll send you some free training. However, so that's why if you use a private money lender, you don't really need credit. If you use a hard money lender, you definitely will need credit. So that's why credit's iffy, but you don't need any of your own money. Now, there is risk involved because you're buying something and fixing it up. But for this example, you borrow $200,000 to buy and fix up the house, right? Now, let's say you sold it for 250 grand. 250 grand, all right? Now, you borrow 200, you have to pay closing costs and realtor fees, let's say 2%, 5%. So let's just be simple and say, you know, 10K. That's a little light, but 10K you paid to closing costs and realtors. And then you owe your private lender 10 grand in interest. So 250,000 minus 250,000 minus 10 is 40,000 minus 10 is 30,000. So this flip, this example, you made 30 grand with little risk, but risk, no credit if you use a private money lender, and no money if you use a private money lender or hard money lender. So this is just a way to, you know, make money without using any of your own money. However, if you want to minimize your risk, Do quick, this is the recession-proof part. Do quick rehabs. Do something that is going to be a $25,000 rehab, as I said. Don't do $60,000, $70,000 rehabs. There's more risk involved. They take more time. There's more holding costs. The market can shift in an 8-month rehab, 9-month rehab. So do quick rehabs. And if it needs a ton of rehab, if you get a property under contract that needs 80 grand, wholesale it to somebody else who's willing to take that risk. During this time in recession, I suggest getting in and out quickly to minimize your risk. I don't think the market's going to crash, but to minimize your risk. That's my thoughts. That's how you fix and flip. Last but not least is rental properties. Now, again, I own $40 million worth of rental properties that I bought without using any of my own money. Double tap the screen, everybody, on Tiki. 11,000 likes. Let's try to get 25,000. Double tap. Tiki Instagram. What's up, YouTube? Head over to YouTube if the quality is decent. All right. So I have $40 million worth of rentals that I bought without using any of my own money, as my friend Kong would say. So how I do that is through the BURR's method. Who has heard of the BURR's method? With the S, buy, rehab, rent, refinance, and scale. Not with the R. Thumbs up if you've heard of the BURR's method. Buy, rehab, rent, refinance, scale. Thumbs up if you've heard of it. Thumbs down if you have not heard of the BURR's method. No shame in your game if you haven't. I'm the only one that teaches it. Other people teach the BURR method. I'm the only one that teaches the BURR's method. So unless you've heard it from me, you haven't heard it. So if you're thinking, I think I've heard that from somebody else, you haven't. So let me know if you've heard it or not. Or if thumbs up if you heard it, thumbs down if you have not. Man, that was a good half of a Celsius, Jaden. Where'd the other half go? Yeah. All right, buy, rehab, rent, refinance, and scale. A lot of thumbs up, a few thumbs down as well. Somebody said a little bit maybe. All right, so this is the method I've used to buy $40 million worth of real estate. Now let's take that exact same example of property and walk it through the BURR's method. Now, you're gonna need credit, you don't need your own money, and you're gonna take risks. So each one, there's a little more risk involved, but as I said earlier, not very much risk. And if you're on TikTok and Instagram and you're like, where is he on this? This is all gonna be on my YouTube. This is all recorded, it's all gonna be on YouTube. So you can stay here and chat on my YouTube later and watch this entire thing. It's gonna be about 30 minutes worth. All right, buy, rehab, rent, refinance, and scale. Let's take that very same property. Remember, somebody wholesaled to you for 175 grand. So you bought it for 175 grand and it needs $25,000 in repairs. So you need $200,000 to buy and fix up a property. Now, don't worry about the price point. I saw somebody saying you can't find houses like that anymore. You can. These are distressed properties, people. You can find a shit ton of distressed properties under $200,000, $300,000 in most markets. You don't know where to look, so obviously you haven't found them, and you're looking on Zillow, so you don't know how to find distressed properties. But if you know how to find distressed properties, they're out there. So you borrow $200,000 from a private lender. He pays you $200,000, she pays you $200,000, you buy it and you fix it up. So you have $200,000 of your private lender's money in this deal. You bought it and you rehabbed it. The next step is to get the property rented. Now don't worry, I didn't forget about your private lender, hard money lender. We're gonna get them their $200,000 back plus an extra $10,000 in interest, which is an incredible return on a 90-day investment. So you got your property rented, but now that your property is fixed up and rented, you take it to a small local bank and they will write you a check for 80% of the appraised value. Let's say this property appraised for, what's 80% of 250,000, Jaden?
What is that?
80% of 250. So let's say this property appraised for 250,000. Let's make sure the math works. Times 8.8. All right, perfect. So this property appraised for $250,000 because you bought it at a discount. I probably should have known that math, but anyways, you bought it at a discount and you improved it by putting money into it. So it appraised for $250,000. So the bank will write you a check. They will hand you a cashier's check for $250,000 or for $220,000. Sorry, a lot of numbers up here. What you do is you take that $220,000 and you pay back your private lender $210,000. So he made 10 grand, she made 10 grand without doing anything. They gave you a check for $200,000, you bought a house, fixed it up, got it refinanced, and you wrote them a check back for $210,000. So they're paid off. They're happy. They made 10 grand without doing a thing. Ask them to show some of our YouTube. What? All right. And then you made $10,000 of tax-free money on this one as well, or you can just keep it in the deal if you want. Oh, yeah, and a lot of things. If you're on YouTube, hit the notification bell if you haven't. If you're on TikTok, by the way, TikTok and Instagram have notification bells, and so does YouTube. So if you like any of my content, if you think I'm funny, or you think I'm stupid or ugly, or you just like to watch it, me look like an idiot up here, or you like to learn from me, on TikTok, YouTube, Instagram, all of you, there's notification bells, but especially on YouTube, hit that notification bell. So when I do go live, you get notified. All right, so now you made 10 grand, your private lender's paid off, you own a property that you have a $220,000 mortgage on. So the private lender's paid off, but the bank's not. The bank didn't just give you 220. They need to be paid off, but it's a mortgage now, so over 25 years, you are going to be paying your rent, pays off your mortgage plus all owning expenses. Then after that, you scale, which is to create wealth and do this at a high level. I have plenty of videos on that. Got a YouTube on that, got Instagrams on that, got TikToks on that, got podcasts on that. Ordinary Guys Extraordinary Wealth podcast. All right, so now how do you do this with little risk? So a lot of people are concerned about the houses dipping in value and interest rates. So let's cover those two things. Value, because this is people's concern with rentals. Value going down and then interest rates going up. That is not a good combination to buy rental properties, okay? Have a little context though. So values, they're not really going down, they're just not going up as quick of a pace. Where you should be buying rental properties is first-time home level type buyers, that price point, and those prices are never going to go down because you can't build them for that cheap. The $500,000-$600,000 houses in St. Louis, you know, the $800,000 houses in Chicago, the $400,000 in Oklahoma City houses, the $600,000 houses in Houston, like those a little more expensive houses, those may get hurt a little bit, but these $200,000 to $400,000 house price points, Chris Crone talks about it all the time, never buy a house worth over $250,000, those aren't going down in value. I hate to break it to you, there's not enough out of them, and it costs $400,000, $300,000 to make that house today. It's never going to drop way down the replacement cost. So that is a big part of it. So don't worry about the values dipping. In rental properties, they're not going to dip that much. But if they do dip, it doesn't matter. If you're not looking to sell it and you're at the right bank, they're not going to call your note due. So that doesn't really matter as long as you're buying with equity at the beginning. And in and out quickly, the value's not going to drop very much. Interest rates, they're up and down. They've actually gone down in the past month, and they're going to go up, and then they're going to go down. So they're going to fluctuate a little bit, but lock them in now. And if it goes up, great. If they go down next year, just refinance. So just play the game, and interest and rental rates have gone up more than interest rates have gone up. So you're collecting more rent than you ever had before, and interest rates are, you know, gone up, but not even as much. All right, Jay, we're about to it. So make sure you hit the notification bells. Follow my TikTok, YouTube, and Instagram. Ordinary Guys Extraordinary Wealth podcast. Follow me on there if you all don't mind. 5-star reviews are great. DM me on Instagram if you want my free training or my private lender information. Peace out.